Hello, welcome everyone again to another MakerDAO Collateral call. Today is December the 2nd, 2020 at 6 p.m. UTC. And we're happy to have with us Shanky from Leverj or Shashank. I don't know which one you prefer. But yeah, basically it's, for those who don't know, it's a derivatives decentralized platform. So we're going to speak a little bit about perpetual positions, futures and whatnot. So Shashank, if you want to take it over.
Absolutely, yeah. Well, thank you, Juan. Firstly, thank you for having us on this show, and thank you for helping us make a case for L2 as a possible collateral for the maker world. So, really appreciate that. What I would like to do this morning for me, and I guess for some people it may be evening, afternoon, early morning. It's a global call. Is to essentially introduce the idea of Leverj, the L2 token, and the underlying technology. So consider this more as a sort of overview type of a session, so you have a good understanding of what we bring to the table, and then that would hopefully provide enough context to then possibly consider L2 as a collateral in the maker world. I see this as a beginning of a conversation and not necessarily a conclusion, so to speak, in
Yeah,
today's
absolutely.
call. And very happy to keep it very interactive, and we'll take questions. In fact, I don't have a PowerPoint type of presentation because I think that those tend to get more pedantic and boring. So I will just walk through the concepts, show you things that are live, and would be happy to keep it as interactive as it works for everyone. Okay. All right. So with that said, let me first give a little introduction on the story of Leverj, so to speak, and the underlying technology and why and how this is important to the entire ecosystem. So the company was founded based on some experimentation and initial work that happened as early as 2015 and 2016. And in that time period, none of these current generation DeFi platforms were around. In fact, for that matter, Ethereum was barely born in that period. So, a lot of the cryptosphere, if you may, was very young, very early, and most of the activity was around Bitcoin and the early days of the Bitcoin, when even Bitcoin itself was not very well known at that point in time. And the idea that got the team very excited, right, or the sort of genesis of Leverj, was really around the fact that can a derivatives platform be built on this new asset class? So that was the sort of the first idea that came up. And do keep in mind that this is the period when even Bitfinex, BitMEX, a lot of these venues were also barely coming up, and some of them didn't even exist back then. And at that point in time, I think the bigger questions really were, can we do this in a way where we can use the virtues of Bitcoin, so to speak, which is largely the non-custodial nature, the decentralized nature. And it wasn't so much about building a platform where you could trade items and just mimic what happens in the fiat world, but build a new infrastructure that can basically provide completely new capabilities, pretty much in the way that one would think of Bitcoin itself, right? I mean, it wasn't just a method of payment, but it was just a drastic new way of sort of thinking things. So it was a lot of experimentation. There was, in fact, an earlier exchange called CoinPit that friends of mine who founded this company, Bharat Nirmal, got started out with. And they built it out originally to kind of trade initial sort of the likes of perpetuals. They were more like futures contracts, but the likes of perpetuals on the Bitcoin platform. Now that story was interesting. It was a great learning experience. A lot of things worked, but a lot of things were also very difficult because programming on the Bitcoin platform was non-trivial. It firstly did not provide a whole sort of a programmable platform to start with, and secondly, that it was also difficult in general to achieve things when the gas fees were high and the transaction fees were becoming exorbitant. because then the cost of doing a trade was so high, it was very prohibitive for anyone to even indulge in anything that perhaps had benefits of decentralization or non-custodial nature. So then from there, Leverj essentially was born, and it was born towards the end of 2017 as the sort of Ethereum ecosystem started taking shape. And Ethereum seemed like just the right platform with its, capabilities to program, the ability to sort of um, scale at that point in time as compared to Bitcoin, right? So, everything is relative. And of course, it was also a new platform where there was a lot of more sort of, the programmatic nature that had drawn in a lot of good talent and a lot of good energy. And the whole sort of initial, I would say, V1 of the DeFi foundational stuff was being built out. So that's where this was born, really. And fast forward when the platform was being built out, one of the early limitations that came up was really around scale. So one was drawn to Ethereum because the idea was, hey, this would scale and this would be good and this would be like a world computer, if you may. But soon enough, I think as soon as enough people started building on the platform, the problem became one of scale. And when I say one of scale, it essentially ended up becoming prohibitive in terms of gas costs, slow in terms of speed, and doing everything on chain had its own limitations, even in terms of data size and every other parameter that I think most people on this call are very familiar with. So then Leverj essentially sort of, I would say, stepped back a little bit in 2018 and most of 2019 and said, well, we first need to build a robust infrastructure. And once we have the robust infrastructure in place, then we can go back and make the decentralized derivative story real. And so that's where the sort of L2 scaling technology was born. And the L2 scaling technology that is available today from Leverj is called Gluon and has its own identity in that sense, right? It's an open source, open spec that has been discussed quite a bit also on sort of the plasma channels initially, and then has its own venue and own sort of ecosystem that is just kind of coming together now. And on the basis of that, Leverj was able to realize a high-speed decentralized derivatives platform. The derivatives platform itself went live only this August, which has been about a couple of months now, 3 months. And it's slowly but steadily gathering steam. And the expectation is that that platform will be one of the many different ways that the Gluon network and the Gluon technology would help make the whole DeFi ecosystem better, from decentralized derivatives to fast instant transfers to AMMs, which are fast, to what have you, all kinds of things that exist in the financial service world. So that is the sort of very higher level picture of where Leverj and where Gluon fits in. And of course, there is a token that drives the governance and the some of the security constructs. Plus also allows people to earn rewards if they stake actively. And that token is what is called L2, which, as you would see with the name, is pretty much in line with the sort of layer 2 scaling, if you may, right? So there is a little play on that word, right, in terms of L2 being the token name, and of course the underlying thesis also being layer 2 scaling. So that's what, yes, of course.
Just for those that don't know what derivative is, I don't know if you want to give a very short definition and maybe say which kinds of derivatives you have on Leverj. On
I will, yeah, good point. Yeah, thank you for specifying that. So what I'm going to do, Juan, is I'm going to park that a short bit because I'm going to show things, right? And let me share my screen. That way I think we can
sounds good.
Right, we can start seeing, but I would certainly address that. I think it's a good point and I should address it. Okay, so I'm sharing a few things to start with. Okay, and then I'll certainly address and give a more context about what derivatives themselves are and what is the layer 2 technology. And again, as I talk through it, please stop me. I don't intend this to be a monologue. So if there's anything that doesn't make sense or should be explained in a different way, or there's more nuances to it, if you have questions, well, just stop me right then and there. Okay, so first things was just to get familiar, this is the Gluon network that I was talking about, and I will speak a little bit more about it. What's the Gluon network and the underlying technology? There's a lot more information on this website. We can certainly talk a little bit about the white paper and the underlying technology right now in this call to the extent possible. There is the Leverj site, the corporate site, so to speak. It's Leverj.io. So if you go to leverj.io, you will be able to see this. The sort of the website. The website, of course, like most corporate websites, so to speak, or any sort of organization websites, gives you a little flavor of what the underlying company is, what the underlying product is, and then of course provides a little bit more flavor into the technology itself. There are sections here which lead more specifically to documentation and links to blogs, which also has a lot of content for those who are interested in getting into the details and looking at what we've been up to, or some of the explanations around our technology. There's also a section on FAQ, which as the sort of name suggests, tries to address some things up front. And then of course, last but not the least, it sort of connects with the markets. So if you want to start looking at the markets, you can go to the markets and you can check the details out here. Now, this is, of course, the live site, the mainnet site, right, which is available at live.leverj.io. What I'm going to be demoing today is mostly on the test nets. And we have a couple of test nets, which one can freely go and use, register and play with. And these are on the Infuro networks. So the one that I'm going to show today is the Coven network, which is Coven Leverj.io. And if you want to look at the Ropsten one, that has a similar sort of naming scheme of ropsten.leverj.io, and you can go there and access those venues as well. So, okay, so let me try and address that question first, since you asked about derivatives, and just give a more higher level picture. And then we can start digging into some of these details, both around Leverj as the product and company and Gluon as the technology, and try and bring it all together in terms of what the L2 token means for the ecosystem and for its relevance in terms of the maker ecosystem as well. Okay, so in terms of derivatives, again, I'm going to assume here that the knowledge about derivatives and this sort of, this meeting is very diverse. Some, of course, maybe experts understand it well, and some may have no idea what that means. So I will go back to a little bit of fundamentals and quickly try and build from there and talk about the asset classes or derivatives within the crypto space and what we support. So derivatives, as the name suggests, very simply, is sort of derived assets, if you may, right? And the idea of derivatives really comes from the fact that the value of that financial instrument or the value of that asset is derived basis the price or some sort of a measure of something else, right? So that's the kind of the sort of fundamental 101 of derivatives. I think many of us, if we haven't even directly dealt with it, have certainly heard of terms like futures and options and things of that nature. These have been around for a long time, for a couple of centuries now. Many of these emerged really in the agricultural sector. So the genesis of derivatives, at least in the United States, there was a little bit of that in Japan as well, but a lot of the sort of organized derivatives in the United States emerged in the world of agriculture. And if you really think about it, the genesis was around hedging. The genesis was around risk management. So the idea was that, if you're a farmer in the Midwest and you were growing corn, or you were dealing in, hog trade, or if you were selling bales of cotton, or if you're buying oil, and, of course, a lot of these got added on over a period of time. The idea was that what happens if there is, weird fluctuation of demand, and therefore your prices go out of hand or out of whack. And therefore, you would either suffer a huge amount of loss, or you might end up facing these very abrupt sort of swings in both the demand and supply, thereby sort of making the markets very one-sided for these traders, right? These growers who actually have, earn their livelihood and work around these whole agricultural products and trade. So at that point in time, the idea really emerged of, well, could we set a price a few months out, right? Like, could we set something which is in the future, right? And that emerged originally as more custom contracts, which are called forwards. And they got more organized and more sophisticated over a period of time and emerged into things like futures, which are basically standardized contracts on these exchanges like CME, the Chicago Mercantile Exchange, the NYMEX, and a bunch of other venues. And now if you look at it globally, there are a ton of sort of fiat world exchanges that let you trade a lot of things. They let you trade things derived on the prices of individual stocks, on the value of indices like the S&P 500, on commodities like oil and cotton, and you've got things of even weather patterns and things of electrical grids. And in fact, people have even made custom derivatives on things like the possibility of usage of insurance plans. So there have been all types of derivatives in various shapes, sizes, forms that have emerged over a period of time. It's a very sophisticated asset class, which has a lot of different sort of exotic sort of types of assets today in the market, which are also layered sometimes in the sense that one is derived of the other, and then there are derived things of derived products. And of course, what has happened because of that is it's become a humongous asset class in terms of the total dollar value that gets traded and the total notional dollar value of all these assets that exist in the world today. And typically it's believed, I don't have a number off the top of my head at the moment, but typically it's believed it's massive multiples of the global economy. So, the global economy is 70, 80 trillion today. You're talking about a derivatives notional value, which is multiples of that number. So it's in hundreds of trillions of dollars of notional value that exists in terms of derivatives, okay, today as it exists. Now, of course, when I mention this, I'm talking primarily about the fiat asset class, right? Which is basically in the regular markets and across different asset classes. What we have seen in the crypto world is that beginning of, I would say, around 2014, 2015 timeframe is when it kind of started coming in. There may have been something earlier than that, but that's when it started gathering steam. There has been a lot of activity around at least basic futures contracts or basic contracts that let you trade on prices of the main crypto assets a little ahead in time. So in the sense that there are products that let you trade Bitcoin price 3 months out, and there are things that let you trade the Ethereum price, in similar timeframes. And those have been traded in many exchanges, a lot of centralized exchanges, including BitMEX, which had, of course, made a name for itself, and is going through its own crisis at the moment, but certainly helped establish that asset class. There have been exchanges like Deribit, exchanges like there was crypto facilities, which got acquired later. And then, of course, right now you've got a lot of main players, in fact, including Binance Futures and many others who trade in these products. Now, let me actually pause at that. Any questions, any thoughts on the derivatives market? And, then I can talk a little bit more about perpetuals and the most popular ones in the crypto world.
I have one if no one else does. Okay, Shashank, can you explain a little bit more the difference between futures and the perpetuals?
Sure, absolutely.
You a little bit.
Yes, absolutely, yeah. So that's actually a great question. And, perpetuals is the product on our platform. So, it's a good sort of foundational question to help understand what product we support today. Okay, so first things first, let's just try and understand futures a little bit further, double click into it, right, and see what that product looks like. So a futures contract usually has 2 or 3 characteristics. One is a certain time to it, So, it's either a future means essentially implies an asset that matures 3 months out or 6 months out or 9 months out or 12 months out or some time period like that, right? Typically, futures tend to be structured in a quarterly fashion. So you do see a lot of futures becoming expiring or maturing. These are the words that are normally used along those time frames. So they will mature, let's just say in March and then June and September, and then towards the end of the year. And what happens in these products is essentially they become available, they get traded, and when the day arrives, the so-called day of maturation or the day of expiration, um, you try to determine the price of the future as opposed to the underlying asset that it's deriving its value off. So for example, if we did Bitcoin, let's just say, and we said, or Ethereum for that matter, since I have a screen open right now, which is showing Ethereum prices, um, and we said that we would do a 3-month future, and the settlement price of this Ethereum future is in February, okay, February of 2021. And today that came out, and let's just assume we ascertained we were all very bullish and we expected the price to go up. And therefore, the market feels that the Ethereum future should be 600 or more. And let's just go with the number 600 for a case in point. Okay. Now, what ends up happening is that as it gets closer and closer to that date, like the February date, as I just made up, the price of the spot market or the price of buying Ethereum by just paying cash and buying instantly, and the price of this future would start converging. They would come together. If they don't, then of course it provides an ability for an arbitrage, right? But between now and then, the prices may vary quite a bit. People will trade it. Some people will have a bullish outlook. Some will have a bearish outlook. And ultimately, that settlement, so to speak, happens that 3 months out. In this, my fictitious case, in February, right? So until February, you don't know whether you are really finally going to make money or not. What you do know is the trend as it builds from now until then. And what you also know is that the price of the futures obviously would adjust on a daily basis because obviously the price of the underlying asset is also changing on a regular basis, right? However, the settlement in this case, or the finalization of whether you finally made money or you lost money, happens at the date in February, which is the settlement or expiration date. Now, a little variant of that is a version where this expiration date, in some sense, never comes, okay? And the idea is that you could settle the difference, or you could find out how you stand against the underlying underlying spot price on a daily basis or an hourly basis or an 8-hour basis or 12-hour some basis, but the expiration date really never arrives. So there is no sense of an expiration date, thereby allowing you to sort of be in that position forever and ever. Now, of course, there are some externalities that could force you to close that position, but let's just simplify it for the moment. And so this instrument with no expiration date, right, which is just open-ended future, if you may, is called a perpetual. Now the name sort of fits in, hopefully. And the idea here is that you could settle off or trade off against the spot prices on a regular basis, and that regular basis varies from exchange to exchange. But effectively, you never really close your position, so to speak, or you never really settle, so to speak, on a given day. It's just an ongoing, perpetual sort of a characteristic of this contract. So that's where the sort of the perpetuals come in. And perpetuals have become incredibly popular in the world of crypto. In fact, among the derivatives asset classes, futures certainly is very popular. And within that, the subclass perpetual is by far the most popular instrument out there, driving majority of the volumes across exchanges, centralized, decentralized. If you look at any derivatives exchange, perpetuals is where most of the excitement is. And in fact, if you further break it down, most of the energy is really around perpetuals on two assets, Bitcoin and Ethereum. So that's where most of the action is. There are, of course, a lot more different classes of perpetuals that are now coming up. Similarly with other derivatives, including futures, for example, on other altcoins, or um, on also things like indices and so on and so forth. But those are still early. Those are still young, so to speak. Okay, let me
The one
pause.
we're
One, did
looking
it
at,
answer your question?
yeah, I was wondering if the one we're looking at is a perpetual, because I don't see any expiration date.
It is a perpetual, yeah. And so let me maybe now just walk through a little bit of how things work, and hopefully that will also explain some of these concepts. I know that in a sort of overview call, sometimes it's difficult to do justice, right, to explain all these concepts, but I'll try and do as much as I can. Yeah, so if you look at this, the site that I'm sharing right now, this is essentially the Leverj.io perpetual trading platform, and this particular one is opening up at the ETH-USD pair. Now, let me mention a few things about this contract, just so that all of us have that. We're all on the same page, and then we will dig into some of these specifics here. So first things first, this is obviously, as I mentioned, ETH price-based derivative, right? And it is a perpetual with no expiration date. So this is one that is just on and on and on. If you look at the screen per se, it gives you a feeling as if you're buying spot, right? There, for a person just looking at it first time and just focusing on, let's say, the order book or the order entry, um, nothing reveals very clearly whether this is a perpetual or it is a spot. It looks very similar to it, right? And in some sense, there is a lot of similarity to it, because um, what this really is saying is you buy or you sell, for that matter, right, Ethereum for a given price at this point in time. What you're going to do is you will end up holding a position. You will end up holding that perpetual position, but the look and feel at a very high level is very similar to buying and selling Ethereum. And which is why you see even the buttons here tend to have that kind of nomenclature. And you will see this in other exchanges also. So this is not unusual. This has become very standardized now. Now, what is important though, and which is not visible to the eye, is that all these trades would happen in a completely decentralized manner. And this would happen on the L2 chain, which essentially means that, let's just assume two of us on this call were trading, and they one party wanted to sell and the other party wanted to buy. This particular platform, Leverj.io, would help bring the two parties together because they would both have accounts, so they'll come and trade here. But effectively, Leverj.io, as the operator of this platform, has no control, so to speak, on the assets of either party. So unlike custodial exchanges or centralized exchanges, where you have the centralized entity kind of being like the bookkeeper, right? They control both the parties' assets, they match the trades and they settle them off. In this particular case, think of it as the technology doing it, right? And that's where the Gluon network and the layer 2 scaling, and of course the main chain as well, which plays a key role, they sort of do all of those mechanics. And the operator per se has no control over the coins. Now, of course, that you can't see from this piece because it looks like a regular order book, and that's intentional, because the idea is that people's look and feel and experience of high speed, quick, easy should be exactly how they are familiar with, both in the fiat world and now in the centralized crypto derivatives world. But behind the scenes, they have control over their assets. So in this particular case, I think before we get into some trades, and maybe I will do a sample trade or something here and show it, a couple of other things to look at. So this particular instrument is a ETH-USD instrument, and this also ties in nicely with the reason that we are on the call today, is that while it says ETH-USD, because the prices are essentially the price of ETH in dollar terms, right, which is this 599.41 that the index is saying right now on my screen, the collateral or the asset that you really use to trade this particular instrument is DAI. So what you do is when you come in here and register, right? And I'm not going to walk through the registration steps there, but it's a simple sort of linking up with MetaMask and, just sort of approving it through a couple of on-chain small clicks. But once you register, you will end up seeing a wallet like this. Okay, and this wallet is nothing but what is called the Gluon wallet today. And the idea of this Gluon wallet is that you have things which exist in your main chain, right, on MetaMask. Like in my this test account, I have 500 DAI right now, which is sitting here, right? And I have more DAI, which I have moved over to a second chain or a L2 chain, which is called the Plasma chain or the Gluon chain. And so what I do is once I've connected and registered my account, I take a part of it or all of it, depending on how much I want to move. And I take that amount and move it over to the Plasma wallet. And now that it's available in the Plasma wallet, I can use it to trade these derivatives. Okay, so in this particular case, I can go here and let's just say I want to buy some of this, and maybe I'll reduce the quantity a little bit here. So let's just say 1.1, I can just buy some of this. And here you go. So this particular purchase that I made or I'm intending to make is essentially based on the DAI that he moved in here. So the DAI that I had moved in here, the 7482, this is what allows me to make that purchase. And in this particular case, once I buy that, and I'll explain a little bit more of what I mean by buying it, but once I buy that, a certain amount of my DAI goes towards that purchase. Okay. Now, if you again go back and look at perpetuals, the important thing to understand is that you essentially take a position on the asset. So in this particular case, you are saying you believe that by buying, I essentially expressed saying that I think the Ethereum price is going to go up. It's like buying Ethereum, right? And therefore, as the Ethereum price goes up, I would benefit from it. That's essentially my sort of underlying thesis or underlying intention, right? And so in this particular case, when I buy ETH, what I'm really doing is I am taking a position, what is called going long, right? And assuming that I would benefit from an increase in price of Ethereum. And so what I effectively do is I open a new position. So, here is where I had put the orders, and I can put another one just to sort of show you how the order would look. Okay, so if I buy another one, so this was filled. Did you just see that? I don't know if you saw the notification. That one was obviously had a corresponding quote from the market maker's book. So it got filled quickly. And therefore now as soon as I'm filled, I have essentially an open position. Now what this open position is essentially saying is, in this particular case, says that I am 3.34 quantities of holding 3.34 quantities of ETH. That's what it's saying. I'm long 3.34 ETH. And effectively behind the scene, all I have done is I have basically put a certain amount of margin, right? In this case, these are where the margins are showing. So let's say 99 in this particular case, initial margin. So 99 DAI is what I have spent to enter into this position. Now, the idea is, why would I do this if the price really goes up? In this particular case, right now, the price is 596. And let's just assume it goes up to 605. I could decide to close my position by putting it back on market. And therefore, I would end up making that profit, right? Because I bought it at 597. And then now with the future price is going to be 605. I would have made that difference. And that's my profit. All of this I'm basically doing using DAI. There is no ETH involved here. I'm playing with the ETH prices and benefiting from the price movement of ETH. But what I really hold is DAI. So I'm holding DAI. I'm using DAI to enter into a position. And after I have made that profitable trade, what I also earn is DAI. Okay. So let me sort of pause at this and see if anybody has any other questions, and I can explain some more of what these various terms mean. I know some of these can be a little specialized if you aren't very familiar with it. And I'm also hesitant to jump in giving you a lot more details about derivatives if it's not your cup of tea. So let me pause and see if there's any active questions.
Any questions, guys? Okay, I have a couple of questions, Zhank.
Please go ahead. Yeah.
Are you, so the first one would be, where where is the price coming from? Like, do you have some kind of oracle for making sure that the price is the right one? And the second one has to do with the margin. Do you guys have or how do the liquidations work? At which type of percentages?
Fantastic. Both phenomenally good questions. Yes. So I think, one of the things that's discussed a lot, and I'm just going to step back and answer the first one first, right? So is this whole concept of the price itself. Where is the price coming from? Who's determining the price? And we've also seen this whole discussion around oracles and the decentralization of oracles and manipulations leading because of the oracle price and so on and so forth, right? That's been a topic that's discussed quite a bit in the DeFi world. The important thing to understand is in our case, we need very high speed quotation of prices. Essentially, we need a second level quotation of prices. Why do we need that? Why we need that is because we are essentially in some sense trading or settling on an ongoing basis in a real time basis, right? Because somebody might want to close the position if they're in profit. Somebody might want to close the position because they can't take losses anymore, and positions might get liquidated. You already asked a question around liquidation, and I'll explain that in a short bit, right? And so we need to be aware of where the underlying spot price is at any given point in time, and it needs to be accurate and it needs to be precise. Now, what we do today is we take in this market data or this index data from 7 different main exchanges. So if you have places like Binance, and you have places like Huobi, those kinds of venues, and there is a very specific list of which ones we take for which instrument, but we take from those places. And what we do is we definitely do not want to get influenced by these sudden blips, because those sudden blips is what causes erratic behavior in prices. So we essentially take a median value of that, thereby taking out those externalities. So if the price has fallen way lower or way higher in one of those ticks, right, we kind of discard them. And what we go with is, in some sense, the more logical median average, so to speak, of that of that value. Right now, if you were to go down to a blog, you'll find a ton of information on all of this. Okay, so for example, let me show you one on liquidation, and I can leave that behind. This one does talk about, it explains in depth about how liquidation works, how the prices come in, and it also talks about the whole median value, et cetera, et cetera. Okay, so you can get into it. So that's the general sort of thesis. Okay, because we certainly want to make sure that the prices that are being available are transparent, and the prices that are being calculated are not being influenced by these one or two actors, thereby taking away any sort of externalities and malicious behavior, and just reducing that down to something which is more scientific and which is more transparent, right? Now, having said that, there are 2 other things that we are currently doing that I want to mention here. So we have entered into a close partnership with BNC, Brave New Coin. And Brave New Coin, by the way, has been a great supporter of ours for a long time. They've also been, from their investment side, been an early investor in the company. And they've also partnered with us for over 2-3 years now in terms of just even giving us feedback and working with us closely. What we have seen is that what we came up with, this median-based index, is something that these guys have institutionalized using a lot of very standard, well-audited mechanisms, and those are already in place, right? So there are things like the BLX index and the ELX index, BLX tracking the Bitcoin prices and ELX tracking the ETH prices that are well established, they're well audited. And so what we have agreed upon and what we're going to do in the near future is we're going to move to those indices for the index prices. Our assumption is that you would not see much of a change because our methodologies align really well. What we do today, which is very transparent, and what is going to come from BLX is very similar in terms of attitude. We only hope that with sort of time tested and more well audited indices, that rare chance of something going off because of some odd behavior in the market data would also get caught. So that's basically our hope. Now, do remember that any participant can listen to this index as well. So, there are feeds for it, the WebSocket feeds. We are again making all of that public, and any participant who's trading on the exchange will have access to those, and they can listen to it, and can also have their own calculations offline and make their own judgment if prices are close enough or far away, or if they see any idiosyncrasies. They can also certainly jump in and participate. Okay, so that's one part. Now, liquidation. So let me talk about liquidation a little bit. And in the interest of time, I'm going to also go and talk a little bit more about L2 per se, right? The token that we're here for. So liquidation. Long story short, and again, I'm going to make it super simple. For a detailed explanation, I would certainly encourage everybody to read this blog post. It is linked from leverj.io, and there's a lot of great sort of explanation here, at least as much details as possible. There's also more discussion on funding rates, etc., on the blog, which may be of interest to anybody interested in this asset class and in Leverj.io. But let's go back and look at liquidation. And this is where I can also talk a little bit more about this open position, right? So the essential idea in any of these derivatives trade is that you should have enough asset so that your position makes logical sense, makes logical sense for you and makes logical sense for the system. What does that mean? That really means is that in this particular case, if you have put down a margin of 99 DAI, right, which is what I'm showing here, which is what I did, right? If my losses accumulate way beyond this margin that I put, right, and margins, the losses obviously would keep getting calculated on a real-time basis because the price is moving, right? Then me holding that position makes no sense beyond that point, because effectively my losses have exceeded, in some sense, way beyond the amount of margin that I've put in, right? So that's the sort of underlying idea. Now, obviously, I think just purely from a market mechanics standpoint and from a standpoint of keeping it fair for everyone, one does not wait till every little drop is drained out. Because if every little drop is drained out, it's already too late to even look for gracefully closing that position. So if you were to liquidate all the way in the end, that would become more like a forced liquidation, almost like a foreclosure, right? Which is called ADL in this jargon. And or auto deleveraging. I think that's the word that a lot of people use, shortened as ADL. So you don't want everything to be a foreclosure. You don't want everything to be an ADL. You want to have an opportunity where these positions can be closed more gracefully. So what we do is think of it as we buffer it up a little bit. And again, all the math, all the details are there. I'm going to skip that for now because that'll end up becoming an hour-long conversation on its own right. But that allows us to take one of these positions and put it back on the book and find a more graceful match, so to speak. Now, if there is no match, so what does that mean? It means, let's say market is moving up north, right? Prices are going up, up, and up. Somebody's sitting short. Somebody feels the market is going to crash. It's not crashing. There comes a point where the amount of deposits you have put in, the amount of margin is too short. Now your position needs to be liquidated. Your position essentially becomes an open order at that point in time. The liquidation engine picks it up, puts it on the books, and tries to find the best match possible. If it finds a good appropriate match, fantastic. Then it can just basically close that trade. You obviously suffer some losses, but at least the losses are curtailed to an extent, to as much as possible. And in some sense, the position doesn't stay hanging there, because for every long you need to have a corresponding short for the market to remain balanced, right? And that's what makes a fair market. And that's how it's done. But suppose there is no match, nobody wants to go and take the counter position for whatever reason. At some point in time, that order remains open, it falls way below the margin, right? Every little penny of that margin is sucked out. At that point in time, ADL comes in and it just forecloses it essentially, right? And whatever can be recovered out of it is recovered. And that whatever little recovered goes into something called an insurance fund. And that insurance fund is just used in future to provide, sort of a counterparty match for these things which get liquidated. Right. So that's a sort of high level here of liquidation. And as I mentioned, there's a lot more details. I would certainly encourage people to go and read it. Now, the other part that I haven't shown yet, which is a good, nice part of this layer 2 scaling is, a lot of all this stuff that is going on the layer 2 chain or the Gluon chain, including liquidations, etc., are totally visible for the public on what is called the Gluon Block Explorer. So the Gluon Block Explorer is, essentially an explorer for the L2 chain, right, for the Gluon chain. And here you can see every single activity. This is what gets validated. This is what gets, compressed essentially, or gets represented as Merkle root hashes and finally gets published onto the main chain. But unlike a lot of other technologies like ZK rollups, for example, where there is no transparency into the individual transactions, in the case of Gluon, every single transaction can actually be tracked all the way down here in this block explorer. One can also listen to this block explorer, and one can also run their own Gluon node and essentially build it off if they would like. Now, I can just show a little bit here. Now, again, Gluon explorers are available here in a similar way. So this one was Cowan Leverj IO, and the Gluon explorer is available at cowan.gluon.leverj.io. The Ropsten one is at ropsten.gluon.leverj.io. And then, of course, the mainnet one that you can also look at is at gluon.leverj.io. So if you want to just look at the mainnet, which is a public one, you don't have to log in or anything of that sort. You essentially just go here to gluon.leverj.io, and you can look at what's going on here. Okay, and very quickly, you can look at all the transaction types here, right? So you can look at deposit, withdrawals, executed trade. You can look at various assets. This is the various sort of markets, and you can put your own account as well. So let's just assume this is one account. I'm just going to randomly pick one, and you can see all the transactions for that account. Okay. Okay, any other questions?
Yeah, hey, I missed part of the call, so maybe somebody asked already, but so how long does it take for me to deposit ETH? Oh, maybe you covered this already. Like roll-ups takes like 7 days, I think, 5 days. CK is half an hour with loop ring. Maybe if I get lucky, 15 minutes. Did you go over that yet?
I have not, but that's a fantastic question. Yeah. So there are two parts to the story, the deposit and the withdraw. And I think that's a fantastic question because the deposit is from the main chain to the L2 chain, right? And the withdraw is the reverse from the L2 chain back to the main chain. We certainly aren't a 7-day chain, so we are way faster. We're closer to that 15-minute and 30-minute type of mark. Now, in deposits, it usually takes today somewhere closer to about, I would say, 10 minutes, roughly. And withdrawals are a 2-step process. So I can actually show it. Why don't I just show it here? We won't wait for 15, 20 minutes, but I can show it. So let's say if I wanted to withdraw some of this DAI out, right? So I essentially withdraw DAI, and let's just say I would withdraw 500 of this. So when I withdraw this, as it says, it's a 2-step process, right? So the first one is my intent or request to withdraw. And once it goes in there, obviously it has to go through the validation process because the fraud proofs and any kind of validation needs some time. And then you would be able to just move it. So this would be instantly done. So this one is withdrawing here, it says, right? Withdrawing from Gluon. But the step 2, your ability to actually take that piece out would be about 30 minutes today.
Oh, very cool. Yeah, a lot faster. And did you go over the front running part of things? And is like something like fill or kill available on your platform?
All good questions. Okay. So firstly, front running is not possible on this platform. The reason being that there is a very deliberate intent to avoid it. And it's part of the Gluon framework itself. We have specific fraud proofs that essentially address front running. Today, the piece is being run in limited sets of nodes, but in future, you will see these being available across port. Like anybody who runs a node would be able to do it. Let me just show you one part that, for those who are more technically minded, would love to kind of read this. I'm just going to point to that. Give me 1 second. I think this is the right one. Okay. Somehow the white paper is taking me to the GitHub page, but okay, yeah, perhaps this is okay. So So here there's a portion on fraud proofs. And if you go to all the way to the section,
And you can place a fill or kill order, right?
so at this point in time, we have a few order types, right? Let me show you which ones are those. So we have the limit order, of course, right? Again, I'm not going to explain these, but certainly ask me
Yeah,
questions here. You can place a straight out market order, but not encourage, which is why it's not the default. You can define stop limits, right, for your positions. You can also do your stop markets. You can also do reduce only orders. So effectively, I think if you're already sitting on a position, you can certainly have a reduce only orders. Now, explicitly fill or kill type of orders are not there yet, but we can certainly add those in.
cool. So it's coming soon, but not yet.
Yeah, so somehow we've seen that our early users wanted more of these other order types, right? There was more demand for it, but we certainly have all ears, right? If there is more demand for these kinds of different order types or different sorts of trading strategies that people want to implement, we certainly want to support it.
Yeah, it's just that I heard you talk about commodities and things of that nature. I thought maybe you were already there with specialized order types, but yeah, I can see this happening in the future.
Yeah. So we had some of those, by the way, even in the original experimental one. Even things like, the OCO types and so on and so forth. Again, not trying to get lost into the deep world of specialized order types, but we had a bunch of those. We've intentionally tried to balance between new users who want to kind of trade this asset class and experts, of course, who have a desire to have strategies basis those specialized order types. But we'll support them all in due course of time.
Cool. Thank you.
You're very welcome. Okay. So now there's just one more bit I want to definitely touch upon, and then maybe a couple of more questions. I'm almost, at the top of the hour. So if you look at this particular platform, I think one of the important things to understand is that this, and I'm specifically talking now in terms of the Maker Vault, in terms of how it plays in, and what might make sense here is, if you look at the Maker Vault and Leverj as the sort of two venues and how they could play well together, I think there are definitely 3-4 things that pop up in my mind right away. One is a lot of Maker Vault creators and vault holders certainly create vaults basis things like the asset class Ethereum, right? And even WBTC for that matter. Now, if they use ETH, I'm just going to take the ETH use case. They have essentially locked in their ETH in the Maker vaults, and they have taken out DAI. Now that DAI can be used right here to trade and hedge again against the ETH price. So it's a nice, interesting sort of trading strategies that can emerge out of it, right? Where you have the underlying collateral, which is ETH, which you have actually put in the Maker vault, taken out DAI basis that, and then use that to trade, right? Again, not getting into detailed trading strategies, but certainly you can see a lot more cases for both speculation and hedging and risk management that come up in that kind of an arrangement. In fact, in my testnet case, when I generated the DAI, I could easily just take the testnet Coven DAI. I went to this OSS app, which basically the Maker Vault, created a vault using my ETH, generated DAI, and put the DAI back and enter into this position. So that's exactly what I did, in fact, even in this test case. And you can do this in production as well, right? So this is definitely one very direct sort of use case that one can think of. The other interesting important part, and that is the case here that we're trying to make, is how about taking L2 itself, the token, and using that as the collateral in the Maker Vault. Now, L2 is a young token to the extent that it is still just sort of going through that initial process of adoption. But in our opinion, L2 is a very promising token because L2 is the governance token for the Gluon chain. And if you think about it, it has 2-3 different functions. It's certainly doing the, the security and the governance aspects of it in terms of upgrades and other things that would happen, rate changes, etc. on the platform. But it also does staking rewards. Now, staking is not live yet, but it's going to be live very soon. And the idea of staking is that, if you lock in a certain amount of your L2 tokens, if you have L2 ownership, you would essentially reap that much proportional benefit of the amount of revenue earned on the Leverj platform. And eventually other applications that will be built on the Gluon platform, you would certainly earn the corresponding revenue. And if you were to take L2 and put that into a maker vault, now you have an interesting dynamic of, you could have your L2 ownership and you could create some sort of a portfolio. You balance, you put some in, generate some DAI, trade some, and take another part of the L2 and stake it here and earn certain other parts of the revenue. So I do feel that I think it creates both interesting revenue opportunities, but also I think it creates interesting risk management and governance opportunities here, with L2 being considered as a collateral for the maker vault. So on that point, actually, I want to pause. We are at the hour. I've taken the whole hour. I really appreciate everyone sort of spending the time, but I'm happy to take a few more questions. And then, of course, Juan, do let me know what's the best way to kind of share all these links that I can leave behind, perhaps on the website, where people can go in and play with it on their own. And I would be more than happy to answer any questions as a follow-up also.
Sure. So do you guys have any questions for Shashank? Shashank, can you maybe comment a bit on the, well, you mentioned the fees already. Can you comment on what they are? I don't know this industry a lot, so I'm not even sure what the industry standards are, but maybe you can comment on that. And also the gas fees for, well, you mentioned signing a couple contracts, right? So maybe you can comment on that.
Yes, absolutely. Yeah. So at the moment, our spot markets are free, by the way, right? So you can trade for free. I mean, you go to the spot markets and there are comparative prices and you don't have to pay anything, right? Like zero fees. In terms of the perpetuals, there is a fee involved. The way we have adjusted our fees is there are maker fees and taker fees. And if you are in the position as a taker, like you're essentially the side of the trader who's taking advantage of a quote on the book, then you pay fees. And it's very small, it's very small, 10, 15 basis points type of level. We put a certain number there, which is there in the FAQ. And that might change a little bit, fees will change over a period of time. If you're a maker and providing liquidity, you pay no fees, right? So that's the kind of position. You also have additional earning opportunities in your position in terms of funding rates. So the funding rates are very aggressive. Funding rates essentially let you pay if you're taking a counter position. And we have a polynomial curve, which allows for higher payouts than many other venues. And so if you go and bet against the market and somehow things are favorable for you, you would start seeing a decent amount of funding rate payouts to you as well. Of course, the counter would also happen. If you're not on the right side of things, you would end up paying the higher rate because it's a zero-sum game. In terms of gas fees, that's the beauty of the L2 platform. You don't pay any gas fees for transactions on the L2 platform. What you do pay for is certainly the deposits and withdrawals. And so that's why our suggestion is that you hold on to it for as long as you would like, and then make fewer withdrawals and fewer deposits. That way, definitely fewer withdrawals, because you are not just paying gas unless you want to really take it out of the ecosystem. Our idea is that if you are able to essentially make use of the Gluon network to the maximum possible, you would end up incurring practically no fee out there in terms of the gas fees. You would only do it on off ramp once a while. Now there is another piece that I did not show, but I'll quickly sort of show that super quickly, is the fast transfer. So you see this, right? My screen right now. So if I wanted to just transfer DAI from let's just say this part, I'm here, right? This one is here. So if I wanted to transfer this die, I could also do internal transfers in here. So I can do a transfer here which says send die. And in this particular case, my other account, right? So I'm taking in here, this is my other account. And I take this and I can do basically a gas-free instant transfer. And here, if I want to just say 50 die, I want to send there, I do a transfer and it goes to my MetaMask signing, of course, wants to make sure I'm 50 transferred here, right? So instantly transferred right here, which will be available on the other side. So, then if I go back here, I should see soon. Of course, we didn't see the initial, so it's tough to see the difference, but it initially came in right away, right? So there's also instant transfer that happens. So the reason I showed this is since we were talking about gas and overall accruing of the fees and L2's benefits, it's not just about derivatives trading, but there's also instant transfer. And then, we are working on a bunch of other concepts, including AMMs and many other things which are coming soon.
And can you give us a rough idea on how much? I mean, I guess it depends based on the price, right, of the gas fees, but just a rough idea to know a bit how much it is to fund or withdraw the account.
That really varies. We have seen people pay a few cents and we have seen people pay up to $10, right? Depending on how much there is congestion and gas fee. In fact, what we believe, and this is something that I think a lot of people in the L2 scaling world have this hypothesis, is that gas fees is going to become higher and higher as DeFi remains popular. And so I think which is why the L2 kind of shines. This is where you want to minimize the amount of withdrawals and deposits, interactions with the main chain. But yes, it really varies. It's tough to put a number to it.
Right.
Actually, sorry, go ahead, please.
I'm sorry, Shashank. So on the downside, right, on the risk, I guess you're competing against the FTXs of the world, DYDXs, decentralized, and then also I once heard this guy say that the biggest competition is not going to be from L1s versus L1s. It's going to be ZK rollups versus optimistic rollups versus maybe your type of rollup. Oh, Plasma. Sorry. Again, I apologize. I stepped away for a bit. Would you say that's the downside risk, that you're competing against FTX, DYDX, and the fact that L2s are still brand new and we don't know which one's going to survive, or maybe all of them will survive?
That's a great question, actually, and I would be honest and upfront about it. See, every new technology business has risks. There's absolutely no two ways on that, right? I would be I would be lying if I said there were no risks and it was a sure shot win. All right, it's as simple as that. What we do see, though, is just projecting out in the market, there is going to be room for a number of players. I don't think this is going to be a one-player market. And if you slice it in two ways, if you look at the derivatives market, certainly the lion's share is really in the world of centralized exchanges. And so, yes, an FTX, a Binance Futures is certainly a competitor. We feel that the self-custodial nature and the more control that users have will drive them towards getting onto platforms like ours. When it comes to places like DYDX, they are a little more on-chain. So there are other things where in terms of features, we tend to outperform them. And so my feeling is that I think we would certainly shine over those on-chain type of derivatives. In terms of layer 2, I think there's definitely that's an emerging field. I think the final sort of decision on who wins, how many win is yet to be figured out. And I would completely agree with you that that's still a thing that would get emerged. My gut feel there is, and I think my belief also is that I think the solution, whichever that is, that provides the most practical solution, not the most technically savvy solution, but the most practical solution is going to win, right? And there will be more than one that would win, but I think that's the one that's going to win, where you are able to do the benefits of L2, but also it's understandable by multiple people. It's not something that is sort of, shrouded in mystery and people don't know whether it's really safe or not safe, those kinds of things. So that's my 2 cents there.
Got it. And I guess the downside, in your opinion, if you had to be open about it, is just the ability of getting more people to sign on, right?
Of course.
Well,
Of course.
yeah.
And platforms are only platforms, networks, any kind of benefits are only powerful when you have more and more people come on it. So certainly, yes, that's true.
Cool. You guys have a
Thanks,
MIPS application? Because I'm trying to look for it. I can't seem to find it.
Sorry?
No, they don't actually.
Oh, they
So
don't have
the
it.
MIP application. Sorry,
We
go
will
ahead,
put
Frank.
that in place. Yes, I need to work on that next. Our idea was first to at least introduce ourselves. I don't think we are as well known, right, as it stands. And I was taking this opportunity primarily to first familiarize everyone with who we are, what we are bringing. We think the technology and the business both make a compelling use case. We already are big fans of DAI, which is a primary stablecoin in our platform. We are closely integrated with the Maker platform. So we just see that there is like a nice synergy here. And this was just sort of the introductory call, if you may. But yes, certainly it needs to be followed with a more formal MIP6, I think that's what it's called, right? The application.
Yeah. Yeah. Super cool. Okay. Got it.
Thank you.
Thanks, Frank, for the question. Any other questions before we close it and call it a night or a day, depending where you are? Okay. Regarding the links, Shashank, I think probably the best is. I mean, I just put the link of the forum in the general chat here, but I can also send it to you on private. So I think that the best thing is if you're in the forum, so people can interact with you and ask questions, right? But if you don't feel like it, I can post them for you.
I could do both. I'll send you the links, and yes, I'll also post them there. Sounds good.
Okay, great. So yeah, thanks, Shashank, for coming. It was really nice to have you. Thanks both for the introduction. Thank you everyone else for coming. And yeah, next week we're going to have Mona Lisa from Melon Protocol discussing more interesting projects. So see you next Wednesday at 6 p.m. UTC.
Thank you, everyone. Really appreciate it. And thank you for having us and giving us a chance to tell our story. So yeah, thank you.
Thank you, guys.